let's start things off. Just, I think all of you know Dan Hood. He's been editor-in-chief of Accounting Today since 2011. He's a graduate of Georgetown. He's also served as a business editor of the New York Daily News, production editor at the Wall Street Journal, and you're author of a number of novels. And we're lucky. We're really fortunate to have Dan Hood leading Accounting Today. He just provides tremendous insights, and you've been a really great partner for the firms and the profession. So thank you.
Thank you.
And look forward to diving right into this. So maybe you even want to, I think most people know about the top 100 growth trends report, but maybe a little background on that, and then let's start peeling into the numbers.
All right, real quick. This is a report we've done since the early 90s. I think the first one is 1994. And every year we just go out and we ask a bunch of firms, how'd you do? How much revenue did you bring in? What's your staff look like? What's your fee splits? And one of the great things about the profession is that they share all this information so that we can then share it out to everybody else in the profession, because we were talking about this earlier, right? What the top 100 firms are doing is useful information for everybody else in the profession. I should say we also, as part of the top 100 firms, we have our regional leaders lists, which is smaller, but yeah, often pioneering, often advancing firms spread throughout the country, a little bit smaller than the top 100, but often full of just as many interesting trends and stuff like that. So it's a lot of fun to put together, a lot of work, but we couldn't do it without the profession sort of helping us out, everybody being willing to share their these results. So
yeah, there's a lot of quality information in putting these surveys out and asking the questions in the right way, so you get really good insights. Is not easy. So thank you. But let's get into it. So it's exciting when you look at the firm growth. Firm growth again, very high. So why don't we just kind of cover some of the high points?
Let's jump in, right? These are results from 2023, and the big news, right? Double-digit growth, 12.88% growth across the top 100 firms, which is great. I should say it's down from last year's, which was around 18.55%. So it's about a third down, but it's still double-digit growth, still pretty something to be excited about. And more importantly, it's way above the long-term trend over the past decade, where you leave aside the 3 to 4% growth from 2020 and 2021, things were a little crazy. But in the 5, 6, 7 years before that, the average growth rate had been 7 to 9% roughly. So when you look at that, you say 13% growth is fantastic, particularly when you think about going into 2023, we were worried about the economy and inflation and the impact of Ukraine and a million other factors. We were looking at a very dodgy year, and it turned out, like I said, 13% growth. We should be very happy about it. We're also seeing growth in employment in terms of staffing. Staffs are up around 9%. Now that's again down from 2022's 18%. That was a crazy year again. And to be growing at 9% in terms of overall employees, given the pipeline problems that we're also concerned about, that seems pretty great. There's just a tremendous growth. We're seeing 70 firms out of the top 100 reported double-digit growth. So that's pretty strong. We're also, I should say, this includes the regional leaders. We saw similar numbers in terms of firms reporting double-digit growth among those smaller cohorts of firms across the country. So overall, it was a great year for accounting. So,
and I've heard from some firm leaders, it was the best year.
Yeah.
One thing, and we'll be sharing the trends over the last 4 or 5 years. 2022, that 19% was impacted by very high growth from the Big Four. So when I'm talking to some firms are reporting that 2023 was their best year ever. A couple of questions already coming in. Any insights related to this growth being driven by increase in work or increase in pricing?
Our understanding is that a lot of this is mostly increasing work or M&A, which obviously flatters a lot of people's bottom lines. But I would say it's
organic, but there's price increases.
There's some price increases involved, but we have heard over the last couple of years that firms are taking a little bit more proactive approach to their pricing and thinking a little bit more about it. But I think most of it's coming from a lot of new service lines. We're going to talk about CAS because that's one of the big trends this year. That's relatively new. I won't say relatively. It is a new service line for a lot of firms. Enormous growth there, and it's becoming a big focus for a lot of firms. And I think when we talk about CAS, generally we hear a lot about the pricing there is not a problem, but it's a question that firms need to resolve. So you see a lot of changes in pricing over the first 2 or 3 years. Almost every firm that we talk to that does CAS says, at some point in our first 2 or 3 years, we changed our pricing. But I think it's mostly growth. There's a lot of demand for accounting services.
That's well said. A lot of demand for accounting services. And on the CAS line, we'll get into it a little bit in more detail in a minute. but the firms are, I mean, it hasn't been as profitable as the tax and audit lines as they've been, or assurance areas, as they've been building out this line, and that's one reason why they're beginning to get the pricing right.
Right.
So I think, and they're also, you know, they're investing in building out that service. But let's go into this group of billion-dollar firms. I mean, so there's you take the big four out, there's 12 other firms that now have $1 billion in revenue,
which is super exciting. I mean, when you look back, as little as 5 years ago, you had only 8, and now we've got, you know, we've doubled that to 16 firms. 2 firms joined us this year. Those are the ones with the asterisks, if you're looking at that list. Congratulations to Cohn Resnick and Plant Moran for cracking $1 billion. It's fascinating. We're getting this. It used to be there was the big 4 at the top, and they were sort of their own thing.
Right.
And then now we're having this cadre of other $1 billion firms that are, in their own way, their own thing. They're operating in a different way from smaller firms. As they grew up, they adopted new ways of management and so on and so forth. It's fascinating to see that conglomeration at the top, and we expect to see that roster grow. There's a couple of firms there just below that are ready to move up and become bigger. It's pretty exciting. And that's
I mean, I know there's some firms that have let me know that they're basically at $1 billion now, but they didn't get that number, you know, by the end of 2023.
Right.
And this is alphabetical here. So one other in the data point is you've got, I mean, you and I just kind of talking before the show, 8 of these firms have more than 2 billion. So there's so you got 8, you know, so you got 8 and 2 billion, then you've got, you know, obviously some of the largest firms much more than that. Well, let's talk about, and then Lisa, we'll bring you in to kind of comment on, you know, some of the discussion we've been having. But let's look at the growth of the top 100 firms over the past, I guess, 6 years here, and maybe explain to the audience
weird
here
why they're broken into 3.
Yeah.
Well, you had sort of you highlighted this a little bit earlier, talking about the effect of the big 4, or in this case, it's the $1 billion firms, and I always think of it as the big 4, but it's now become this group of 16 firms that are so big in terms of revenues that they can change the overall growth rates of, you know, the average growth rates of top 100 very seriously. So if you look, for instance, from 2021 and earlier, the bar on the right, the lowest one, 2.65 in 2021, 3.36 in 2020. Those are the big 4 firms, or the $1 billion firms. And you can see how, because they're bigger, when they have a slower year, that really lowers the average for the firms as a whole. And then you see in 2022, they pop up to 18.6% growth, and that lifts everybody. So the average, that's how that average got to 18.55 last year. They're down around 13% this year. And so that's one of the things that's moderating us down to about 13%. But what's interesting is you see on either side in the 2023 trio there, right? You got 12.96 on one side, 12.13. Those are the $1 billion firms, and the firms under $100 million on the top 100 firms. They're right around that average of 12.88. But when you look in that middle group, that's the firms between $100 million and $1 billion. And this is a fascinating group. There's a lot of exciting things going on there. Among other things, you're seeing a lot of the impact of private equity there, in terms of, we've got a lot of firms that are driving serious acquisition engines with PE money, and they're having growth rates that are frankly ridiculous. I mean, very exciting. It's very cool. I shouldn't say ridiculous, but it's amazing. You look at these numbers and you see, I think we have a chart of those, but that's where that growth, that 19.81% growth, is coming from. In many cases, it's coming from M&A, and a lot of that M&A is being fueled by PE. So it's really interesting times there.
Yes, and there's a lot of drive. We'll talk about that PE investment in a minute. Lisa, so you're out there talking to the firms all the time. I mean, I think you're well aware that 2023 was, in some cases, probably one of the best years ever for firms of all sizes in the profession, even though there was a lot of stresses related to the talent issue.
Agreed. And what I'm hearing from firms is that they are growing because of the demand for work and for the price increases. I think firms have really gotten much more deliberate about what their pricing strategy is, and making sure that they're getting the value for the work that they're performing. One of the questions that we got in is that growth in staff. Is that are firms having to hire more people because they want to try to manage the overtime and manage the workload? And I don't know that we can answer that question based on this survey. I can just tell you that based on my conversations with firms, they are really digging in and trying to manage the balance of work on their staff so that they can keep and retain their staff. That's an important part of it. I'm going to go all the way back to the first slide and key in on a line that Dan had put on there, which is firms are really reimagining, even in prosperous times. And for me, I think that's a huge point that we're going to play out over the next few slides, because a lot of times what you see in a profession or an industry is they wait until times are bad and then they go, oh no, now what are we going to do? And what we're seeing that Dan's going to point out is that they're really taking a look at what they need to be doing right now, even though it is, record growth and record revenues or record profits.
Thanks, Lisa. So why don't we, talk a little bit about the fastest growing large firms?
Yep.
So when you look at this, and 4 of these firms, 4 of the 6 firms do have PE investments. And just to comment on the PE investments, I mean, the exciting thing here is, the profession, the firms, they're growing. Their value to their clients. We've talked a lot about this over the past 4 years. It's been a defining moment for the trusted advisor, and PE's coming in because they just think there's even more opportunity to do better. Sometimes PE might come into a distressed market. Right. This is not a distressed market. And what you've seen here, Eisner Advisory Group, that occurred in 2021. So that was one of the first very large PE deals, and you see the results.
Yeah. No, they are. Yeah, as you say, this is not a distressed market. This is an opportunity play, right? They see tremendous growth and tremendous potential for growth if it's got the capital to unlock it, right? And that's what you're seeing on this. Cherry Becker doubled in size, pretty much doubled in size. They have, and that a lot of that's driven by their private equity investment, allowing them to do an enormous number of acquisitions. Citrus Cooperman the same way. Eisner Advisory Group the same way. Your part-time controller does have PE investment, but it only came in November of 2023. So that growth is organic. Imagine now what they're going to do with some PE money behind them, and they can combine that organic growth with the potential for mergers if they're interested in it. I'm not saying that they are, but I mean, if they were, that's tremendous growth. And then, you see just throughout this cadre of people, even the firms that aren't involved in PE are just finding new ways to grow. They're finding new ways to be. Lisa, to your point, there's a willingness to try new things and try new structures, not just the alternative practice structure that goes along with PE, but you're looking at, we had 2 big ESOPs over the course of the past year. That's, and then previously we'd had, I think, 2 ESOPs in all of accounting for 20 or 30 years. Firms are just trying new things. We lost a firm from the top 100 this year because it got acquired by a wealth management firm. When has that happened before? Firms are looking at a lot of different options and a lot of different ways to be. It's pretty exciting.
Yeah, and there's organic growth. There's questions coming in, and you have to look firm by firm. Obviously, Cherry Becker, a lot of that is M&A. A very busy second half of 2023. But I can tell you, if you meet I've been with a number of these firms, they all have really good organic growth, and they're also thinking a lot about solutions, providing solutions, building scalable, repeatable practices, Lisa. And these are things that firms of all sizes think about. So there is a lot of learnings here that I think the small and mid firms can take from some of these trends.
And what I love about the Accounting Today report is Dan's going to give you great insights. He's going to you'll get interviews with some of the firm leaders on what's top of mind and how they're looking at growth. So when the report comes out next week, make sure you grab it, because it does give you some really good insight into what other firm leaders are thinking and doing.
Well, should we talk a little bit about some of that, Lisa? And Dan, the next slide here highlights where they're seeing the growth.
Yeah. Let me just one quick, because there's a point that Lisa made that's fantastic, but I just want to jump into. You're right. We cannot tell hiring trends from this survey, or trends about why they're hiring and how they're handling that hiring. But we do ask them as part of to share their strategies for growth. And one of the things they routinely have said over the past 5 or 6 years is managing their staffing better. And so that involves hiring so that they're not burning out their employees. It's hiring so that they can handle the work that's come in. They have tremendous capacity pressures, but staffing and handling that better and doing recruiting and retention better is a definite strategic plan for all these firms, and not just the top 100, is for the regional leaders, the smaller firms spread throughout the country that we survey as part of this as well. So I just want to throw that out because staffing is such an important issue for them, and they really treat it as a strategic issue and not just a, hey, do we have enough bodies to do this?
And the other element, Dan, is technology. And I was just in Las Vegas. I was in Las Vegas this week at the Sage Intact Transform conference, and there's a lot of focus on just, putting in place automation, leveraging capabilities to address some of those talent issues, as well as to just address the expansion of their service capabilities, which are highlighted here in some of the growth areas.
Right. So let's dive into this. And this is really interesting. For a million years, not a million years, since 1994, since we started collecting this data, a test was routinely the area where the top 100 firms the most top 100 firms would report growth. Now, I should say this chart is just firms reporting growth in this area. It doesn't mean it's their fastest growing area. It doesn't mean it's their best. It just means it's an area where they reported growth. We give them a list of 30 or 40 areas, and they pick all the ones where they're seeing growth. Normally, a test is alone at the top and has been for decades. Over the past 3-4 years, CAS has climbed up to the point where it now routinely flip-flops for first place with a test. No other service area has ever done that. So that's wild that a test is up there. 84% of firms are saying they see growth. But what's really interesting this year, and let's go to our next slide, because this really tells the story of CAS in 2023. And I think going forward, we also asked the firms to tell us, in addition to telling all the areas we were seeing growth, tell us the one area where you're seeing the fastest growth. And of the top 100 firms, 25% said they were seeing their fastest growth in CAS. And more broadly, if you look at all the firms we surveyed, include a lot of smaller firms, firms as small as $10 million in revenue in all the regional areas that we survey, 36% of those firms said CAS was their fastest growing area. We've never seen trends in this. When we look at, when we get the list of, hey, what are all the things you listed as your fastest growing area? It's all over the map. Every firm reported something different. And that this year, so many firms centered on CAS as their fastest growing area, I think says something about how CAS is evolving and how central it's becoming to the experience of an accounting firm and the way accounting firms run. And because it's different from it's run differently from some of the other main practice areas, I think it's going to have a tremendous impact on the way firms operate going forward. It's going to change them in a significant way. And I think this is sort of the year where we're going to say, this is the year it started. This is the year where we really started to see this change happen.
Well, Dan, we've been focused on this client advisory services area. There's a couple questions coming in. We should have, Lisa had the acronym spelled out on the first slide. It's client advisory services. Sometimes it's been called client accounting services. This is the category name. You have to have a category name. Some firms call this, outsourced accounting services, business BPO, business process outsourcing. So there's lots of, virtual CFO, virtual controller, lots of different ways this is positioned to the marketplace. This all came about due to cloud computing, and when you were able to put the general ledger in the cloud, and what it's really ushered in is small businesses entering the information age with their CPA firm. So now all the data is in the cloud, and you can really provide state-of-the-art accounting services. So this is something we've been working at with training programs for the last 10 years, 15 years. And I think you're right. We're at an inflection point right now. I feel it when I'm talking to firms. So this data doesn't surprise me, but I think this is as you said, you've never seen something like this. This many firms highlight that this is the fastest growing area, and I think CEOs of the large firms have been saying, "Hey, I'm interested in CAS." Now they're saying this is where I want to grow, and this was actually led. This movement, Lisa, as you know, was led by the small firms. The small firms, in many cases, were the first ones to build out this accounting service area.
Using that technology that has become so crucial to advancing the profession. So they've been more nimble in that way. So this is great. When I talk to firms about growth opportunities, the slide that we had before shows Attest, CAS, SALT. I think SALT is, it's not getting any simpler. And that's a client need. So how are firms adapting to meet client needs? And I think this is a great example, a great roadmap of how firms can think about what their clients are struggling with, think about where the complexities are, and then provide the services that are going to make their clients' lives better. So.
Well, Lisa, thank you. And Dan, thank you for giving us this sneak peek to the Accounting Today report, which comes out on Tuesday. Super Tuesday.
Nothing else is going on, so we picked the slowest day of the year.
Well, thanks. I look forward to seeing the full report. Thanks you've been on many town halls. We look forward to having you on a future town hall. Thanks for joining us today here in New York.
Thanks for giving me the opportunity.